This is Sacha Prettyman of Cirrus Research. The latest earnings playbook is out. The title, Stabilizing Forecasts Cut Against Slowing Macroeconomy. In this report, we focus on the slowdown in the profit cycle. This chart relates basically the slowdown in top line growth, and that's related in the purple line. The blue line relates the estimates that continue to fade lower. What is interesting is we've begun to see a slight uptick in forecasts in the most recent month. And that's curious considering the additional pressures we've seen in the banking sector. The reality, though, is that we are still in the throes of a profit cycle slowdown. We can debate whether it's recessionary or not, but this is, I think, terribly important in terms of how we position the portfolios towards higher quality. Again, in a market where the profits are slowing, what we are looking for are traps and places to hide. And so we use the torpedo models to look for firms where the expectations are just too aggressive. And so the report contains a number of those names. And also, at this point, with the cuts underway, at some point, analysts will get carried away. So the idea is that we've seen a lot of damage on the tape. Let's look for some of the estimates that have fallen out, potentially congealing to a much lower number that's more reasonable for favorable earnings reports. This chart really is a conundrum. What it relates is and this is notable in the large cap market, is really in the last 3 months how we've seen a pickup in estimates from where we were just 3 months ago. This is not what we were expecting, and we thought we would note this. To some degree, it could end up being that the numbers are low, and now it becomes a little bit noisy. Nonetheless, this idea of a recession, the rally in bonds that we've seen from the start of the year, this sort of puts some cold water on that and something to bear in mind, especially in notable sectors that are expensive, such as technology. And then finally, with the upheaval in the banking sector in the last 2 months, what we are beginning to observe, especially with the Fed backstop, is that credit spreads are starting to normalize a bit. And so we are watching them very closely. And importantly, what we've noticed is that the backup in the bank spreads that occurred in the month of March, well, as much as we've seen that relax somewhat, it is probably only a third of improvement. So there's still some holdout here. There's still real concern about what happens with the banks, especially the regional banks. Take a look at the report. With any questions, as always, please reach out to us. Thank you.